The S&P 500 is near the July highs, but can we maintain? Let's talk about it. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. Now, if you want to get the most up-to-date, unbiased information, make sure you smash that like and subscribe button down below. Hit the bell icon to get notified every time we upload a new webinar, because you're not going to want to miss anything we're putting out on this channel, because we are giving you the straight facts and the unbiased truth. Now, let's take a look here at the S&P 500. And for lack of a better term, we have been on an absolute tear since about the middle of the month. Now, obviously, we had Thanksgiving last week, so we didn't have a webinar because, well, there wasn't a whole lot to talk about. But holy cow, this week has been pretty crazy. Honestly, it's been incredibly difficult to trade because we have these big green days and then we consolidate, and a big green day and then we consolidate, and then another big green day and then the week's over. So it's been really, obviously things have been going up, but we have these big pushes and then we kind of hold, and then it just kind of it's melting up, kind of this incremental step that we're seeing lately. But one thing I want to draw your attention to is the RSI here on the S&P 500, way overbought at this point. Looks like we're checking in right around 73, when we close the week. So we are moving up there. We are near the July highs here. And let's take a look here back in the past, back in 2022, right, holding in this area around the end of March 2022. We haven't been this high. So, quite a bit of a downtime, and we've been kind of really grinding back up here for, most of the year. We've been kind of pushing up. We hit 4,600 in July and we rejected hard. So it's going to be interesting to see on Monday if we see a repeat of that pattern or not. But yeah, it's been very difficult to trade. I know if you're following Riz, obviously he's been very selective in the trades that he's taking right now, because we kind of feel this is a little bit overdone, for lack of a better term. We don't really feel that this rally is justified, but obviously people are getting in on it, and you can't deny the fact that the market has been pushing very, very hard despite everything that is going on. So we are very close to the all-time high here at 4818.62. So we're getting pretty close, but again, from a technical standpoint, we did reject hard here the last time we got this high. So we'll have to see what happens on Monday to just kind of give us an idea of what's going to be going on for the rest of the week. I will say we are very overextended at this point, very extended past the moving averages. And it looks ripe for a bit of a pullback. But man, we had this pullback here to 4,100, and it's been nothing but up since then, which was right at the end of October before Halloween. Let's take a look here at the breakdown for the S&P 500. And sadly, my camera is a little bit in the way. I'm going to move that out of the way for myself. Yeah, tech and communications just continuing to go. Look at this run in tech since about the end of October. Darn near parabolic here, plus 50.56% on the year. Absolutely insane, to say the least. Communications not too far behind at plus 43.82%. Consumer discretionary up about 33%. S&P 500 itself is almost up 20% on the year. So a massive push in the S&P 500, and everything seems to be just kind of benefiting from this run up here. But obviously tech and communications, the big, heavy hitters right now, as far as, gains are concerned. We are starting to see financials starting to come back a little bit. Real estate's coming back to life. Energy is sitting about flat. And healthcare, consumer staples, and utilities are still underperforming. But it's been a long time since we've had some of these sectors above the zero line. Obviously, we had them here in July when we hit those highs before, but then they kind of pulled right back down below the zero line and it's starting to curl back up. So it's been very interesting. But again, obviously, these sectors are propping up the market at this point with a plus 50% on tech. Just absolutely going nuts. Somebody obviously wrote AI way too many times during their earnings call, because tech is just going insane right now. Let's take a look here at the asset classes, and oil continues to languish, for lack of a better term. Looks like we closed here on Friday at $74, a little bit over that per barrel, on a bit of a down day, which is very interesting given the fact that everything that is going on in the Middle East right now that oil has not been pushed up higher. So I'm just going to say there's something going on here. Now, obviously, there have been talk about production cuts from the Saudis, but then we're talking about, if I'm not mistaken, Venezuela, or it was either Venezuela or Brazil. Someone can correct me in the comments. Going to be joining OPEC next year. So, is that added supply in the oil going to kind of push oil prices down, or will it be somewhat as a buffer if something goes on in the Middle East, especially if, we're talking about Iran, everything going on there? If that sparks off and we do have, embargoes put in place like we did back in the 70s, will that soften the blow, so to speak? So that'll be an interesting thing to keep an eye on. But one thing I do want to talk about here is gold going parabolic. We had this dip here right around 1820. We, shot up to 2000, had a bit of a pullback, and since then we're shooting up again. We now have a new all-time high on gold at $2,071.95 per ounce. No position in gold right now to speak of, but yeah, gold going absolutely nuts here over the last couple of days. So you kind of have to wonder, what is pushing that market up? Are some of these central banks kind of getting more into gold at this point? Expecting a bit of a pullback in the market, looking for that safe haven asset, to kind of protect their gains. It's a good question. I don't have insights into what central banks are doing, obviously, but nice push on gold this week, blowing through that all-time high that we did try and touch here in May earlier this year and just didn't quite get there. But yeah, new all-time high on gold. Let's take a look here at the breakdown for the bond market and the dollar. So obviously the bond yield starting to come down, from these highs that we experienced here in the middle of October. Riz and I have talked about that at length in our previous webinars, so make sure you check those out if you haven't. But, big dump here in the 2-year bonds, really coming down quite a bit, this week. So, and all the other bond yields are following suit. The dollar, we had a bit of a downturn here, but we're kind of holding steady here right around 103.19. Nothing to be concerned about. I know people and, especially some circles are saying, oh, gold new all-time high. Obviously, the dollar is tanking. Well, it's not, for lack of a better term. We were lower earlier this year here in July when the market was near its all-time highs for the year. So, I'm not, throwing out my dollars just yet. We're not putting the baby out with the bathwater. That's my opinion. So, obviously, the bond yields here, yeah, we are having a bit of a pullback, but still a very solid closing on the week. Looks like bond yields for 2 years closed right around 4.54%. And the 10 and the 30 year are below that, obviously, and they have been for quite some time. Let's take a look here at the important dates in the S&P 500. All right, as you can see, we do have some important dates this week, starting on Tuesday, the 5th. Obviously, we have job openings coming up. That's going to be always job openings and unemployment rate, which is, of course, going to be Friday, are big, market impacting numbers. Now, is it going to be something to blow through, 4,600? It's hard to say. Obviously, we'll need to see where we're at Tuesday, but definitely job opening, something to keep an eye on. Looks like the forecast is, a little less. Previous was about 9.55 million, whereas forecast and the consensus is around 9.4, 9.35. So a little lower. Now we've got the bigger day is going to be Friday, honestly. So we've got payrolls coming out, unemployment rate. That's the big one, honestly. Let's see. They're basically forecasting no change. So that'll be interesting to see if that actually holds. That may be a little ambitious, if you ask me, but we'll have to wait and see. Now, of course, if this number comes back better, then we could see a spike in the market. But again, we've had that inverse relationship this whole time where the Fed's increasing interest rates, basically trying to increase unemployment so that, we can start trying to deflate the currency, but unemployment just keeps getting better and better, which is the opposite effect of what they're having. So the question is if the numbers come back better than expected, will that be seen as a negative catalyst in the market? In the past, we've seen both ways, honestly. So it's going to be pretty tricky. Again, we're not going to be taking any positions or, playing this, but I no doubt that Riz will be keeping an eye on it and may take a position for all of our elite members who are privy to Riz's trades. Now, I had everybody go ahead and post their questions earlier because, when Chris runs webinar solo, we're getting this thing done and we're getting her done quick, right? All right, Jeff said, what's on my mind more than anything is how to take advantage of this rally while still capping risk. That's a very good point. I've got trust issues with this market. You're not the only one, to say the least. S&P 500 is only 5 to 6% away from all-time highs. You are both absolutely correct. And Axel chimed in with that one with the S&P 500. So it is very difficult to trust this rally because there really isn't that much behind it. So, there are a couple ways you can capitalize on this. Obviously, hedging is one way. Taking a speculative downside or downward, looking position against the market if you're expecting a pullback is one way to try and get in on it. Of course, that can go against you, which is what a hedge is. It's there just in case, something happens. So for me personally, it's more of a kind of wait and see. Axel is saying he'd like to see a pullback to the 50 or the 200 to start positioning. I agree with you 100% on that one. Obviously, this blowout that we had, here right at the end of October was very impressive. And, we just kind of blew through the moving averages like they weren't even there. Obviously, we kind of came up here to the 200. We gapped up over that, continued to rally, kind of rested here at the 50, and then we continued to make this leg up. I agree that this move is a little bit too much too fast, in my opinion. We're incredibly extended, as we talked about, and let's see how big that move is. Right there, we go. 12% in about 24 or 35 days or 24 trading days. So that's pretty impressive, for basically a straight move up, for lack of a better term. We'll do Chris's drawing here, but that's a pretty darn steep rise, right? And there's really not, in my opinion, a lot behind this. There's not some huge catalyst. Obviously, the Fed has not said that they're going to start lowering interest rates anytime soon, which, in my opinion, would have some type of effect like this on the market. In fact, they've said that they're going to hold interest rates and that there may be another hike in the future. There are different rating agencies that are giving you different percentages on whether they may increase rates or just keep holding them at this point. I don't put a whole lot of stock in that, but it is something to keep an eye on. But yeah, this rally is absolutely nuts. In my opinion, I don't think that, what we've seen as far as everything going on in the world, especially since, early October, I don't think this really warrants this move. And it kind of feels a little bit fake, for lack of a better term. I mean, obviously the market is going up. I'm not going to say it's not going up, but it feels like there's nothing really behind it driving it, which is why I agree with you 100%, Jeff, where we've got trust issues with this market too. It doesn't feel right. Let's be honest. Inflation is not under control. The Fed may like to say that inflation is under control, but I don't know about anybody else. Prices at the grocery store have not started coming down for me yet. And until they do, I'm not saying inflation is gone. Food inflation is nuts. And I'd love to see those gas prices continue to come down. Not sure if that'll happen. Let's see. Even IWM is participating as well. Friday's candle is wild. It really was, Jeff. So it's one of those things where, you kind of feel like you missed out a little bit. But I have to agree with Axel. I would like a pullback closer to the 50 or the 200 before we start getting too crazy going in with long positions, because it feels like a chase right now. And the last thing you want to do is to be chasing right now. So I would be, how about the shelter in the USA? Oh, you're talking about housing prices? So housing prices are starting to come down a bit, I would say, but at least in my area. I should preface that I haven't been keeping an eye on real estate prices across the United States. But I would say that prices are starting to come down a little bit, but not in correlation to how much interest rates increased. Yeah, the technicals are definitely not good for a long here. This is an absolutely parabolic move, and the last thing you want to do is chase a parabolic mover. In all my days in day trading, some of the worst losses that I ever incurred were when I chased a move, and I got absolutely wrecked. So from that aspect, we don't want to chase, but you kind of want to capitalize on it. So I would say, if you have space in your account, I would start looking at, looking at companies that are very good, very sound fundamental companies that, have a good balance sheet, that are looking good, that wouldn't be as effective as poorly or as badly if the market rolled over here. I still like taking, a couple of speculative short positions or, inverse positions on the S&P 500, aka extra large and extra small, as I like to call them. So SPXL as the long, and SPXS, or extra small, as I like to refer to it, is our leveraged ETF. For the S&P 500 bearish. So when the market goes down, this will go up. Those could be a potential. If you're expecting a bit of a pullback, that could be something to keep in your back pocket just in case, but you don't want to hold on to those for too long because they are leveraged. Let's see. Keeley says that prices are slowly coming down in Arizona. Yeah, it's kind of the same here in Indiana, honestly. It's definitely kind of getting down there. Sean says, would you consider any FANG companies? I mean, it's definitely a possibility. Let's take a look at Apple here. Obviously, Facebook, not Facebook anymore. But, we kind of seen Apple, kind of top off here right around the 22nd. So right before Thanksgiving, and really has just been kind of holding here right in that area. About there is where we're holding on Apple. So about 190, 150. Pretty reasonable. So if Apple breaks out, that could be an interesting one. Again, very close to overbought. We can kind of take a look at Meta, see what they're doing right now these days. So very nice recovery here in Meta. It's coming down a little bit, even though the market has been spiking. So that could be interesting. So Google, that's obviously a favorite of Riz's, GOG, or Alphabet. Also coming down a little bit over here the last couple of days after Thanksgiving. So, those companies obviously are very solid. You're not going to have any problems holding those long term, especially some of those will give you decent dividends if you want to hold them longer. So that's one way to do it in case the market continues to rally. That could be one way to, kind of take advantage of it. Let's take a look at a couple tech stocks. Let's look at NVIDIA, right? That's everybody's favorite. Kind of similar story here as to, with Apple. We've kind of topped off here over the last couple days, right before Thanksgiving. We're starting to come back. So you could take a speculative position in there. It feels a little more risky to me. This isn't a great setup for a long, but it's not terrible. Looks like when's dividend day here? Ooh, 4 cents. NVIDIA, don't overspend it. All right. Keep it in check here, boys. Let's see. Axel says, yeah, he's seen some data about housing prices going down, and that isn't reflected at all in the data of the Fed. Yeah, and that's kind of one of the tricky things, the way that the Fed calculates interest rates. I'm not going to dive into it. It's way too complicated and beyond my understanding, and honestly, not what we really need to be worried about, as far as the market is concerned. But AMD, I'm not looking to take along an AMD just right here. That is nicely extended. So yeah, tech stocks maybe not the greatest right now, especially with how high they've been flying. But yeah, as far as the market, and housing prices are concerned, and interest rates and inflation, things of that nature, you've known my position against the Fed here. I make no illusions as to how I feel about how they calculate the inflation rate, and it seems a little bit adjusted to me. Excuse me, I had to cough there. But yeah, I would be very, very careful taking a long position here. It feels overdone. This gap up to me is just nuts. And then it continues to run like this. I feel like we're ripe for a pullback. Even if we could pull back to this downward, resistance line, which could become support at that point. If we could come back closer there and we hold that area, that would be a better place to start maybe slowly inching into some long positions, if that's something you want to do. And that would kind of be my strategy if I were going to do it. Obviously, we're starting to see the 50 start to curl up here, in response to this huge rally that we've had. So that should probably intersect with this line here within about a week or so, maybe a little bit less, depending on how the market continues to push. But yeah, I would kind of look at that. And even better yet, obviously, if we can get back to the 200 and hold there, that would be a great place to start scaling in. I have to agree with you on that one, Axel. So As always, guys, just be very careful. This is a very difficult market to trade. And Riz said it best on Friday, if I'm not mistaken. It's like, the market's going nuts. And of course, all the Instagram posers start coming out, right? And so I would just be very careful, stick to the program. It's the best way I can say it. And, we'll come out winners in the end. It's not necessarily you have to chase every rally. You don't have to capitalize on every rally. Sometimes we just got to sit out. If we miss the move, we miss the move. And we move forward from that. We look for another opportunity. And that would be my best advice for you going into the weekend. But as always, guys, make sure you enjoy your weekend. Take this time off to be with friends, family, or just to kick back, relax, and play some PlayStation or Xbox or on your computer. Just enjoy the weekend. Don't take life too seriously. And we'll be back at it on Monday.